Alright guys, welcome back to day 8 of my study arc. Today we are officially diving into one of the most powerful frameworks in trading. It's called Smart Money Concepts, or SMC for short. If you have been following the series so far, you know that we have covered a lot about the basics in trading. We've covered a lot about retail trading, price action, structure, and how to read the markets efficiently. Now, SMC takes all that into a deeper level. It's about understanding how institutional traders actually move markets. And once you start seeing price through that lens, everything else just clicks. So let's start with a quick summary before we go deeper. Smart money concepts is built on the idea that markets don't move randomly. Okay, so the price is driven by liquidity, by institutional orders to be filled. SMC teaches us to read market structure, liquidity, order blocks, fair value gaps, and external and internal range liquidity to identify where smart money is entering and where it's likely to go next. It's not about guessing. It's about reading the footprint left behind by the big players. The market basically moves in three types of trends. Number one would be uptrends. So the trend would be making high highs, high lows. And the number two would be downtrend. The market would be making low highs and lower lows. And number three would be consolidation, range where the price goes sideways with no clear direction. As traders, we do not trade in consolidation. We wait for a breakout or a structure shift because we only trade in downtrends and uptrends where we can clearly define structure and follow the smart money flow. So now before we start talking about the break of structure, BOS for short, we need to understand how the price moves in these trends. So there are two types of price actions. We call it price action. So there are two types of price action. Number one would be efficient price action, and then the second one would be inefficient price action. And let me explain the both of them in simple terms. So when we talk about efficient price action, price action is when price moves in a smooth and balanced way between buyers and sellers. There are no sudden gaps, no imbalances. Just it's like the market is efficiently matching buy and sell orders. You'll often see small and controlled candles, no big wicks, no violent moves. Inefficient moves, liquidity has been properly taken out on both sides, meaning there are no leftover imbalances for the market to come back to. Right? Like I said earlier, there are no sudden movements. If it's in an uptrend, it's just gonna go continue the uptrend, and if it's in a downtrend, it's just gonna keep on going lower lows, lower highs, lower lows, and so on. So when the market moves efficiently, it usually means it doesn't need to return to that area again soon. It's done its job there. So there's it's extremely easy. I will show you guys a sketch later, and I'll just give you guys the theory for now. And after explaining it, after giving you the summary of it, and I'll probably go to the sketches and I'll explain it even further. So efficient price action is done, and now we'll talk about inefficient price action. Inefficient price action, on the other hand, happens when the market moves too fast in one direction, creating an imbalance or a FEG. The FEG is a fair value gap, meaning that there are unfilled orders left behind. So you'll notice this when price forms a series of large candles in one direction. No pullbacks, just no wicks fill in the previous range. So if it's going up, it's just gonna be just going up. It's not gonna, like, there's no pullback for now to get the liquidity. There's no liquidity grab yet. It's gonna be a violent move up, or if it's in a downtrend, it's gonna be a violent move down. So this shows that one side, either buyers or sellers, dominated that area too quickly. The market often returns later to fill that imbalance, because liquidity needs to be balanced again. So yeah, let's get into the charts, and I will show you guys sketches, both uptrend and downtrend, so it's easier for you guys to understand what these are. Okay, so like I was telling you guys earlier, there are two types of price action. One is efficient price action, and the other one would be inefficient price action. And these two also break into two parts, because there are uptrends and there are downtrends. So let's first talk about the uptrend scenario. And in an uptrend, what we identify as an uptrend is if the market is making high highs and high lows, we call it an uptrend. So in this two scenarios, these two markets are actually making high highs and high lows, high highs and high lows. So this is an uptrend scenario. And let's first go to the efficient price action uptrend scenario, so it's easy for you guys to understand, and then we'll dive into the inefficient later. So in these cases, in these type of charts, as you guys can see, I mean, there's nothing different. Like, you need to go deeper for you guys to understand this is an efficient price action. So let me show you what the differences are. So when you look at it at once, you cannot identify. Now, if it is making high highs, high lows, high highs, high lows, just let the market go up for a bit, and then just mark the high highs, high lows, high highs, high lows. So it's easier for you guys to like identify these highs and these lows, and then just draw from the high, just draw a straight line towards the these lows. Okay, these lows, at some point the market is going to either make their after making the second high, it's going to make a higher low. So wait for that high low, and after it's done making that high low, just draw this line, draw these lines from the high highs itself, from these high highs itself. Then you guys can see what the market's doing. Okay, so in these scenarios, by the looks of it, you can see that these high lows have come a bit lower than the levels of previous high highs. So these high lows has come lower than these high highs, these levels, all of these have come lower than the high levels. Yes, yeah. So there you go. So in these type of scenarios, you guys need to understand that this is what we call an efficient price action. Okay, if the market is making this kind of moves, if the high lows are going further below, going lower than the high levels, that means this is an efficient price action scenario. This means that the liquidity has been balanced, right? The liquidity, this is a liquidity grab. These are liquidity grabs. These are liquidity grabs. So it goes there further down, getting all the liquidity below, and it's going to keep on going up. There's not going to be any sudden movements that's going to happen below, that it's not going to just magically just drop below. It's just going to go up. Okay, just keep that in mind, because this is what you call a efficient price action scenario. There you go. But when we talk about inefficient price action and an uptrend scenario, just as before, this uptrend is making high highs, high lows, high highs, high lows. And just like before, we are gonna draw a level from here, from the high levels. Let's change the marker. Okay, and then just as before, just draw these lines, straight lines straight lines. There you go. Now by the looks of it, we can definitely see that these high-low levels has not gone lower than the high levels. It all has shifted way above. It has shifted way above. It has shifted. It has broke, like this is break-even points, right? Even if the market makes a break-even point, like it's gonna be the same level, not going lower than this high level, we are gonna call it an inefficient price action. Okay, it can go, it can shift, even not coming from the to the break-even point. It can go further up, or else it can come to the break-even point. So if the market looks like this, we're gonna see it as an inefficient price action. So in these kind of scenarios, the market's gonna make fair value gaps, and like there's gonna be imbalances. The market can shift suddenly. So this is what we have to be extremely careful of. And then let's talk about the inefficient and efficient price action about a downtrend. So as you guys can see, these both of them are making low highs, lower lows, making this as an efficient price action, this as an inefficient price action. I have told you guys there are two types of price action. So let's first get into efficient price action. And just like before, as this is a downtrend, we are gonna use the lows. So just draw these lines, just change the color, draw these lines from the lower lows, and by the looks of it we can understand that these lower highs has gone further higher, further higher than the lower low levels. This has gone higher than the lower low levels. So in this scenario, just as before, it's gonna be the complete opposite. So in this scenario, we are gonna look at the highs. Previously, we looked at the lows. So in these highs, it has gone past in the lower low levels. So in these kind of markets, we call it's gonna be an efficient price action. And then when we talk about the inefficient price action, it's going to be the same scenario. The market is making lower lows, lower highs, lower lows, lower highs, and we are gonna draw these lines and see what the market has done. And there you go. By the looks of it, the lower highs in this market, it has not gone passing the lower low levels. This has shifted early. It has almost gone for the break even. So in this kind of market, this is a inefficient price action in a downtrend. It's extremely easy. Just all what you have to do is just get it to your head. We are not going to use this much for trades. It's just theory. I'm telling you guys what they taught me. So we both have the same knowledge. All right, so now we understand how the price moves. Now let's get into one of the most important concepts in SMC, break of structure. And in break of structure, I mean, there are stuff, I mean, I don't want to bore you with theory, because we are not going to use theory. This is not, we are not going to have an exam at the end of the month or something like that. All what we are trying to get into is trading. I will give you all the knowledge you need to have for trading, for buying positions. So this is going to be the basic of break of structure. Break of structure is going to be into two different types. It's going to be an uptrend, it's going to be in downtrend, and then just like before, we identify an uptrend as a market when it's making high highs, high lows, and in downtrend we are going to identify the market if it's making lower lows and lower highs. But in these kind of scenarios, as you guys can see, the market has gone a bit further in an uptrend. When the market is making lower lows, it has hunted one of these lows, and the market just continued going in an uptrend. And just as in an uptrend, in a downtrend also it did the same thing. When the market is making low highs, it hunted one of these low highs and then went on going in a downtrend. So in simple terms, when you identify an uptrend, just mark out the pattern of the path of the uptrend. So in this is the high, this is the low high, high low, this is the high, this is the high low, high, and when you're marking this high low, you could, I mean, you can actually identify that it has gone a bit lower than the previous high low. And then what you have to do is, we'll get rid of these so it's easy for you guys to understand, to see. It's that the market has gone a bit down than the previous high low. Just mark it there because it's going to be important. We'll talk about that later. Right now we are trying to identify what a break of structure is, what a BOS is. So what we need to do is just mark it there and then wait for the confirmation that let's say the market is right over here and it breaks the high low, and we have to confirm that it's a BOS. We need the confirmation of hunting this high as well, because we don't know whether it's going to go up or down. If it's somewhere over here, we cannot get into trades from here itself. We have to wait. We cannot get into trades from here. We have to wait for the confirmation. So it needs to hunt this level, and then when it's confirmed and it keeps on going up, then we call this line a BOS. So this is the BOS. Okay, this is, I mean, we are not getting into deeper stuff in break of structure. I'm just telling you how to identify a break of structure. This is how you identify a break of structure. So you wait for the break of, in an uptrend, you wait for a break of a previous low, basically a high low, and we wait for the confirmation. And if the market goes on going up, and this, we draw a line from the previous high to that breaking point, to this breaking point, and that is how we identify a BOS. But let me give you a crucial point in identifying a BOS. Now let's say if this break, because it needs to make a high in order to confirm that it's going in an uptrend. So in this break, let's say if that candle, let's say this is a candle, so this is going to be a candle. We'll change the color of it. Let's say it's going to be a green candle because it's an uptrend, and then it makes a big wick somewhere over here, color green. Now when you look at it, you can see, just zoom it out. You need to extremely be precise when you're drawing these lines. Now when I haven't drawn it properly, so we need to get to the exact top. Let's say if there's a wick, we are gonna go for the wick. We are not gonna go for the body at any point. We are not gonna go for the wick in these highs. we're going to go for the we are going to go for the wick itself. Sorry if I said body, because we are definitely going to be using the wicks itself when you're drawing these lines. So when you zoom it out, you can see that we haven't touched, this line hasn't touched a body part. Okay, so if it is not touching a body part, this is not a BOS. Always keep that in mind. This is not going to be a BOS if it is touching a line. But I mean, let's say if the market is going in an uptrend, respecting the uptrend, we need to wait and see. We're going to shift to this wick itself and get the top of this wick and see whether it's gonna go ahead and touch a body, a wick, a candle body. Okay, let's say if it's gonna touch one of these, so somewhere over here it's gonna touch a body, somewhere like this, something like this, and then we said that this is not a BOS earlier because it's touching a wick. But further, when the market is going up at this level, just go to that wick. I mean, I hope you guys get this. When you draw this BOS and you see that this is going to be touching this line, is going to be touch a wick, is touching a wick, go to this wick, go to that touchy wick, and from that top itself draw a straight line to the market. If the market is actually passing that level, and if it touches this touches a body itself, then this is gonna be identified as a BOS. Okay, so our life becomes easier, much easier, if from here itself it touches a body, because then we don't have to do all this bullshit. What we have to do is just mark this as a BOS and then go for these entries. I'll show you how to get into an entry later. So if in this scenario, let's say it's touching a body itself somewhere over here, then you don't have to worry about anything. This, you can identify this as a BOS, and then that's it. Okay, so that's the theory you need to know about BOS. So in this scenario, we just will do this and call it a BOS for now. So as you guys, I mean, if you guys can remember, I told you in an uptrend, if the market is making high highs, high lows, high highs, high lows, and at some point if the market just goes down, breaking one of these lows, it can actually break multiple lows as well. It can just go further somewhere over here, breaking two lows. So I'm gonna keep it simple for now. When we go to the live charts, I will show you guys how it works, because this is a sketch. I mean, this is extremely on point and extremely simple for you guys to understand. But when in the market, these are not clean breakouts. These can just these levels. I mean, this path is just simple. Okay, it looks binary. So inside these also, it's gonna be like these making highs, making lows, and all that. So it's not easy to find, but if you find it, the signal is extremely powerful. So this is how we find a BOS in an uptrend, and then we'll go to how to identify a BOS in a downtrend. And then, so when we talk about a downtrend is when the market is making lower lows, lower highs, lower lows, lower highs. And just like before, if the market suddenly goes up when making a lower high, when the market goes up and hunting one of these lower highs, or it can be going past this as well. We'll just keep it simple for now. So by the looks of it, you can see that it has gone passing this level, one of the lower highs, and it has returned back to its original trend, so it kept on going as a downtrend. So what we have to do is, what we can do is, when we go, when you are looking for a trade, when you're following the trend, now you can see that it hunted this low, this lower high. So once you are here, you wait for the confirmation. So what the confirmation is, it needs to go passing this lower low. So once the market goes passing this lower low, then you can identify that this is a BOS. So what you have to do is, you mark the BOS. It's going to be a BOS somewhere right over here. So draw this line. Like I said earlier, it's going to be, if this point has a wick itself. So let's say the market is something like this. So if it is something like this, go to its wick to draw the line. So you are going to draw the line from here to here. Okay, not the body. You are going straight to the wick. And then like I said earlier, when you are drawing this line, if the market goes and touches the body itself, then you do not have to worry about anything. So if the market is something like this, if the market makes a candle like this, then everything is safe. Because if not, so let's it's a downtrend, so make it red. So just zoom it out. If it does something like this, if the market touches the body itself, then you can call it a day, call it a BOS, and be in your merry way. But let's say if the market does not touch the body, so it's something like this, and the line touches a wick itself, then this is not a BOS. This is not a BOS. You wait and see if the market's gonna touch another body by extending this line through this wick. Go to this wick, not the body, go to the wick itself and draw a line. Keep on drawing lines until you find a bloody body. So there you go. Let's say that it touches a body somewhere over here, then you're safe. You can call this a BOS, and then you could wait and see how to get in on a entry. So let's say it does not keep on touching any body itself, then do not tie yourself finding a body, waiting for a body, because it's not gonna happen. It's gonna shift and go on being an uptrend, because the market's gonna shift. There's no body touch, because if it does not make a BOS in a trend, let's say if it's in a downtrend, if it's not confirmed, if it's not confirming a BOS, eventually it's going to be an uptrend. So if it was in an uptrend and there's no confirmed BOS, that means it's going to keep on, it's going to shift at some point. It's going to be a downtrend. So wait for that confirmation. The confirmation is crucial. Confirmation is important, and the confirmation is what we need. There you go. I taught you guys how to get in on these BOSs, how to get the confirmations, and how to identify the BOS. So in these two scenarios, you know where to identify the BOS. So in this, it hunted this low, and there you go. These two are BOSs in both types of trends. Okay, let's BOS. Okay, there you go. These are the BOSs you need to be you need to know how to draw a BOS by now. Okay, there's nothing. I'm not keeping anything. I taught you guys every single thing. Like if it's not making if it's not touching a candle body, you have to extend it until it finds a body through the wicks. And if it's not touching any bodies, it is not a confirmed BOS. And now let's talk about the important part of BOSs. It's called a swing high and a swing low. A swing high and a swing low. So in these two scenarios, in a downtrend or an uptrend, those two types, they both have swing highs and swing lows. Okay, so let's get rid of these. And I have not made the hunt for a low higher low in this downtrend. I haven't made the hunt for the lower high. This is just this is a normal market without any massive movements. So let's get rid of all these. I mean, this is an uptrend. So the market is making high highs, high lows, and this is a downtrend. This is only for you guys to identify which trend these are. I just wanted to keep everything simple for you guys. So this is lower lows, lower highs, lower highs. So we'll get rid of these. By now you guys know how to identify a trend. Just okay, there you go. Okay, so in this it's making high lows, high highs, but at some point it's gonna go below a lower high, sorry, high low. Well, first talk about the uptrend scenario, and I'll show you how to get the swing highs and swing lows, because these two are crucial when you're getting into trades. Just keep that in mind. So in this scenario, you can clearly see that this low hunted the low previously made, and then you guys need to know where to get the BOS. By now you need to know where to get the BOS. So here is going to be a BOS. We mark it over here. Okay, now remember, previously we said these are high highs, high lows, high highs, high lows, high lows, high lows, because it's an uptrend. But these are, I mean, even though these are mentioned as high highs and this is mentioned as high low, these names change when this move happens, when the BOS move happens, the break of structure happens. Okay, because we cannot keep it the same, we can't keep it the same, because the market actually shifts a bit, right? So we'll just clone it. This is also going to be a high low, a high, and we'll keep this. This is going to be a higher low, but these 2 points are going to change. Okay, well, I'll clone this, but the rest of the points are going to be the same, but this point itself, these 2 points are going to change, because the movement is a bit different. Okay, so when you guys, like, as you guys can see, it went and hunted this low. So swing high itself, we're talking about a high. Swing low is when we're talking about a low. So this higher low is going to be a swing low, and this high is going to be a swing high. So how you identify those, let me talk about that as well. So we'll get rid of these highs as well, because I've told you how to identify the high low, how to identify the high highs, the swing low and the swing high. So we'll get rid of these high lows, high highs. So the chart is a bit simple. Okay, so let's keep it here, and we'll get rid of these as well. For now. Okay, and then we'll draw a new path. So the market shifts and it's making high highs, high lows, high highs, high lows, and there you go, it makes a high high. But There you go. Then the market makes that hunt. Then the market makes that hunt. Yeah, then the market makes that hunt. It went further below than the previous low. Then that is when you identify this high. Then you need to understand the market can actually keep shifting downwards. It can be the end of that uptrend. It can make lower lows, lower highs, and keep on going as a downtrend. But you need to keep in mind that there is a slight possibility that this high can become a swing high. Okay, so the swing high is confirmed, and let's say the market respects the path of the previous trend and keeps on going up, confirming the BOS, and there you go. Then you have a confirmation that this is a BOS, and there you go. This low is gonna be a swing low, and the swing low is confirmed after this high is hunted. This swing low is confirmed after this swing high is broken by the market. So for this swing high, we are going to go for the top level. If it's a wick, we are going to go for the wick. If it's a body, it's just a body, we are going to go for the highest point of the body. So there you go. The swing high is identified, the swing low is identified, and what is confirmed here? The BOS is confirmed. That is how you identify a swing high and a swing low in a uptrend. Okay, and then let's go to a downtrend scenario. So in this scenario, the market is making lower lows, low highs, lower lows, low highs, lower lows, low highs. So just like before, let's say at some point the market's gonna break a previous lower high, and the market keeps on respecting the trend and keep on going down. So in this scenario, when you look at it, you should be able to identify what a BOS is. So just mark out the hunting line. There you go. The previous high is hunted, and then when it's confirmed, when the BOS is confirmed, you draw that line itself, and there you go. You just write it down that it's a BOS itself, and then just like before, these lower highs, lower lows, we are not going to use the same name for these two. That is when this swing high and swing low, these two names come in handy. So for this low, we are going to use swing low. For swing high, we are going to use this point. So this is the swing high, and this is going to be a swing low. So this is extremely simple, because the name itself, it just gives it away. We are going to use swing high for the high. For the swing low, we are going to use it for a low. So let's get rid of these for now, and I will show you how to identify these in a live trend. So let's say in a sketch, so let's say the path is this. So there you go. It made a lower low, lower high, lower low, lower high, lower low, and there you go. The market made a shift, hunting one of these lows, one of these highs, and the market kept on making lower lows and lower highs. So in this scenario, I think I made a bit lower lows, lower high, lower lows, lower highs, lower lows, and there you go. It made a shift, hunting this high. Just mark it down, and right there you have a confirmed swing low. You have a confirmed swing low here, but the market can actually just keep on going, making high highs, high lows, and shift it in an uptrend. But if you are looking for a BOS, you need to wait for the confirmation of the downtrend, and there you go. Let's say it confirmed, and once it confirmed, and when once it confirms, like once it hunts this swing low, just draw a straight line, draw a straight line, draw a straight line from the wick itself or the body itself. I mean, if there's no wick, go for the body. If there is a wick, wait for the wick, go for the wick, and it should be a straight line. And if in here this point touches the body, there you go, you have a confirmed swing high. This is going to be a swing high, and when this is confirmed, we have a swing high. Then what else is confirmed? The BOS. There you go. So the BOS is confirmed as well. That is how you identify a swing low and a swing high in a downtrend. Okay, now let's get into a live chart, a live trade for me to show you guys how to identify a BOS in an uptrend and a downtrend. So it's easy for you guys to understand. So by the looks of it, you cannot understand them. This is BATC, and it is making it's actually in a uptrend by the looks of it. You guys can actually see it's making high highs, high lows. This is the daily chart. It's making high highs, high lows. Let me show you how the path goes. So from here, it's making high lows, high highs. There you go. Yeah. So by the looks of it, you can see itself that this here itself, it made that shift. It went down further, a bit lower than the previous low. So we'll get rid of this, get rid of the path, and we'll zoom it out. We'll zoom it out. And there you go. We need to you need to see and like just draw the line where it hunted the low, the previous low, this low, this low. This is going to be a previous low. Here it hunted, so we'll just mark that out. And for the beat, what have we identified so far? So this part, like I told you guys earlier, this part is going to be a swing high. There you go, swing high, just as such. Okay, we'll keep it short. Swing high is going to be this point, and we are going to wait until the BOS is confirmed. We are going to, for it to be confirmed, we need to wait until it goes up. So there you go, the market changed and the market shifted going up. And what is confirmed here, once the BOS is confirmed, the swing low, the swing low. This, okay, the swing low is confirmed and the swing high is confirmed. So we'll just keep it here, we'll just make it a bit bigger. I'll make it this also a bit bigger. And there you go, the swing low and the swing high is identified. But now we need to see whether the BOS is actually, it's a confirmed BOS. We need to go for this swing high. We need to zoom it out. We need to zoom it out and get this line to the wick, that last point, to this wick, and it should be a straight line. It should be a straight line. Now when you look at it, when you zoom it out, you need to see that it's not touching a wick body. It's touching it is not touching a candle body. It's touching a wick. So we are going to go to the next, this wick, and we are going to draw from this wick to this body. There you go, it touches the body. So what confirms in that? That confirms that this is a confirmed BOS. This is a confirmed BOS. There you go. That is how you identify a BOS in an uptrend. Yeah, it's extremely easy, but what you have to do is you need to zoom it out and be extremely precise. Okay, so this is a good scenario of a BOS in an uptrend in BTC. So let's get into a down trend scenario as well. Okay, so this is Ethereum. So when you look at it, you cannot identify anything. Just go for the path itself. Let's go for the path. So this is a high. There you go. It's a low. High, 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 low, high, 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 low, and it hunted here. It came down. Let me be extreme, like yeah. Okay. So just like I said before, this is we'll go for the path. There you go. Here, and there you go. So by the looks of it, you can identify that when this move went and hunted this high, this lower high. So what is confirmed? So when this shifts from here, the market comes here, and it shifts. So this point is a swing low. This point a swing low, and the market goes up here. What we are going to do is we're going to mark that level which it went and hunted this high, and we keep it ready. And now we are waiting for the confirmation of this POS. So this is going to be once it confirms, this point is going to be a swing high. So we'll get rid of this, and there you go. So we'll increase the size of it. Okay, and then once the swing high is also confirmed, we zoom it out, and then we get to the swing low. Here in this swing low, we need to be precise and get the line to its proper wick. Zoom it out. There you go. It's not to a body itself. So we go to the next, the touching wick, and we go to this wick. It's still not touching a wick, a body. So we go to this wick, and then there you go. It's now touching a body, and then only we can confirm that here it's gonna be a confirmed BOS. There you go. This is a confirmed BOS in a downtrend. So that's it for now, because I'm not gonna overload you with SMC for now, because today is the day one. We have to keep it short so it's easy for you guys to understand. And don't worry, I mean, it's going to be over pretty soon. And to wrap up today, we talked about how the market moves, uptrend, downtrends, and sideways. To focus on trending markets, not consolidation. We do not trade in consolidation. There are two types of price action, efficient and inefficient. We talked about those. Imbalances are most likely to happen in inefficient price action. So always keep that in mind. And finally, we spoke about the main part of today's lesson, that is breakup structure and how to identify a swing low and a swing high. So those are key stuff. Keep that in mind. Always practice in the live markets, because the more you practice in the live markets, it's easier for you guys to identify those BOSs and swing highs, swing lows in the live market, not just the sketches. So yeah, in next session we'll go deeper into SMC, things you need to know. Actually, need to know how to get in on trade. So just tune in. If you guys like the video, like, subscribe, and share this with your friends. And yeah, I'll see you guys tomorrow in day 9.